Hey guys, hope you're all doing really well. Look, I just wanted to run through what happened on gold and the Nasdaq. I trade the futures, so the gold and Nasdaq futures last night, and also just quickly run through a gold trade that I took. I wasn't super confident about it, so I really reduced my sizing, and yeah, still took a trade based on a 4 hour level, and I'll run through that just in a second. But before I do that, for people that are new, I always run through the strategy that I trade, which is the ICC strategy made popular by Trades by Sai. ICC stands for, and if you know the strategy quite well, feel free to skip this section. But for those that are new, I'll just run through the strategy. So what is ICC? ICC stands for Indication, Correction, and Continuation. It is a trend-based strategy, meaning price either needs to be in an uptrend or a downtrend for the ICC concepts to play out. So when we're looking at charts in particular, we're marking up our charts with the focus of the 4 hour and the 1 hour time frame. I have been of late tending to stick with the 1 hour, but the 4 hour is just important. I think what's really important is just looking at what looks best. If it doesn't make sense, then don't trade it. If so, for example, if the 4 hour looks better, then trade the 4 hour or mark up your charts on the 4 hour. If the 1 hour looks better, then mark up your charts on the 1 hour. And that just takes a bit of time and practice to do that. And just lots of hours, lots of repetition. It will come naturally with time. So if we're to look at an uptrend and the ICC concepts to go with, if we're in an uptrend, we want to look for a low, a high, a higher low, and then a higher high, creating another higher low and a higher high. So the market is creating that uptrend here. So when price makes this low, a high, a higher low, and a higher high, we get our first phase, which is the indication phase. So price breaks above its previous high, creating a higher high because it's higher than the previous high, and also it's this higher low, it's called a higher low because it's higher than the previous low. So once we get that indication phase, we can then draw our level of interest on that previous high, again, either on the 4 hour or the 1 hour time frame, whichever looks best. So once we've got the indication phase, we then wait for price to come back below our level of interest. Now, preferably we want price not to break its previous level. So we want it to create, again, another higher low. So price is making higher highs and higher lows. So at this point in time, we're thinking, okay, that's great. We can now then scale down. So once the correction phase, which is the second phase, which is this phase here, coming back below our level of interest, we can then scale down to our 5-minute and 15-minute time frames to find the overall characteristics in support of the overall trend. And in this case, the overall trend is up. So it's an uptrend. So then we scale down to the 15-minute time frame. We're looking for characteristics. When price then gives us those characteristics of an uptrend, so creating higher highs and higher lows, we then look to take a buy entry at our level of interest. We take an entry here, and then we look to target the higher high that we created. For me personally, I take off half my positions at around the halfway point, and then the remainder at the next higher high. And that's as simple as it is, guys. The reverse of that completely is the downtrend. So the reverse meaning we start with a high, create a low, create a lower high, creating a lower low. Once we create that lower low, this is the indication phase. We can draw our level of interest again on the 4 hour and the 1 hour time frame. So from here on out, then price comes back above our level of interest, not breaking the previous lower high. So this is further indication that price is in a downtrend. We then scale down to the 15-minute and 5-minute time frames, and we're looking again, just like we did with the uptrend, characteristics of a downtrend. So we're looking for lower lows and lower highs. We then again scale into that 5-minute, 15-minute time frame. Once price gets below our level of interest, we're looking to take a sell trade here. Just like the uptrend, we're looking to target the just the reverse. We're looking to target the lower low here. Again, for me, I will come out, half my position will come out at the halfway point between the entry and the lower low, which is the overall target. Now, some have different risk appetites. Some people like to let their profits run. For me, at this point in time of my journey, I'm just taking profits where I can. So I'm more comfortable taking profits at the halfway point and the lower low, or the halfway point of the higher high and the overall higher high if we're going for buy trades. So that's it, guys. That's all it is. Now, I'm going to quickly run through, firstly, what happened yesterday. I wasn't super comfortable taking a short trade here. So if we can just quickly review this, I had a level drawn at the body of the candle. Now, just another thing, if you haven't watched my videos, my preference for drawing my level of interest is I draw them on the bodies of the candle. It's just a personal preference. It depends how you like to trade. You got to do what's comfortable for you. People do also trade on the wicks. So for instance, if you wanted to look to potentially trade this indication, well, you didn't get a correction really. You can put your level of interest on the top of the wicks there. My preference is the body. So if we go back, I'll put that back there or wherever I had it. Perfect. So we can see here yesterday, which was Monday the 17th, I had my level of interest drawn here because I could see here. I'll just zoom in a little bit more. We can see price created an indication here. We know that price, from looking at the previous levels here, we know that price is creating lower lows and lower highs, which means it's saying that price is in a downtrend. We also broke this significant level here, which means that at this point in time, the higher time frame is confirming that we are in potentially a downtrend here. So at this point in time, I had this level drawn at the body of the candles. We created this indication. Price then came back above this level. And at this point in time, I had scaled into the trade, scaled into the 15-minute and 5-minute time frame. We'll start with the 15-minute first, and then I can just show you my thinking. Just remove this for the moment. So I trade generally the London session, which is 3 a.m. Based on the UTC -5, which is the New York time zone. So 3 a.m. is around right here. We can see price on the 15-minute time frame actually already created a bit of an indication. Now, I was looking at potentially getting in around this area. But the thing that did stop me from not getting into this trade, although we were creating these lower highs here, we also didn't actually come back down and break this level here. So I was a little bit hesitant in getting into the position and just wanted to play it a little bit more conservatively. So I didn't feel comfortable, so I didn't take the trade. Although it did actually play out. And if you were to get back into the trade, you did have further confirmation here. We can see there's the high in the market here. There's a lower high, another lower high, another lower high, another lower high, and further again, another lower high. These are all really, really, really good characteristics of a downtrend. So if you did get into this trade, very well done to you. Pretty much pre-New York time is probably would have been the best time to get into that trade. You can see you've had all those points confirming that price is definitely in a downtrend. Again, this would have been a little bit conflicting for me because you can also see that price isn't breaking these lows here. So again, that was just another reason why I didn't want to take the trade. Also, it was at a time where I wasn't at the chart. I trade generally for a couple of hours, which is from the start of the London session, and unfortunately, it just doesn't work for my schedule. So if you did get into the trade, this is what you probably would have looked for. You would have looked to take a short, probably somewhere around this area. As you can see, that price wasn't making wasn't breaking these highs here. Would have had probably a stop loss above how I normally do things, which is above the swing low. Maybe even more conservatively, probably around that swing low there. Then you would have looked to take profit at the next swing low, which was generated here. So if you did take that one, that would have worked out perfectly. It would have absolutely smashed the take profit later on around 2:30 p.m., which is more than a few hours into the session. You would have had to been very patient for that one to play out. And you can see here, if you did take that entry there, that's a 1 to 3.8, which is perfect. That's exactly what you want. So that worked out really well. I hope you guys caught that one. If you do trade the New York session, that would have been a really good trade. Okay, now the trade that I took just about half an hour ago, let's just delete this level so we're not getting confused now. Okay, we'll go back to the 4-hour time frame. So if we're looking here on the 4-hour time frame, I'm looking for where buyers were once strong and where sellers were once strong. So we can see here, if we go back in time, we can see at this point in time where price pushed up really strong. I'm looking for levels where where there were sellers once before then price took back off again. So I'm looking for my level of interest essentially. So if you were to look at this sort of like even on the daily, actually the daily looks horrible. Let's not look at that. Okay. So you can see here that if you were to zoom out on the 4-hour time frame, you can see that this is very much a clear indication. So the higher the time frame, that means the stronger the probability of the trade working out in that direction. So I was looking for potential buyers above this level based on a 4-hour time frame, because I can see price was making higher highs and higher lows. Price came back below this level, which is my level of interest. I then looked to get in at I scaled into a 5-minute and a 15-minute time frame just to look to see where price was. And then I looked to take profit around this level here because I was being very, very conservative. I still think that potentially price is probably going to come back, maybe even break further low. I just wanted this as, I guess, almost a bit of a scalp. I wasn't very confident with it, so I just put on one contract. And also because I haven't had a trade in a while, and I just wanted to take it easy and just play it safe and just take the one contract. So if knowing full well that we know that this is the indication phase and this is the correction phase, if we then scale into the 15-minute time frame, that doesn't really give us very much, other than if we run through this together, we know that this is our 4-hour level of interest. We can see on the 15-minute time frame, price is making lower lows and lower highs. We can see at this point here, price actually breaks above its previous level here, which means that above that level that we could have, well, that this is technically an indication. So when I saw that, I was quite interested and potentially thought that at London Open, which was right on 3 a.m., where volume does come in quite heavily, I took a position and thinking that if price does get back above this level, where I know that 4-hour, which is a very high level, where buyers were once strong before, I knew that, or I had some inkling that price would break above this level. Excuse me. So if we then look to, again, scale down a little bit further, we can see here, again, it's the same sort of formation. Price broke above this level here, right? Price then came back below this level here. It's not really perfect price action at all. We can see price broke. So we've got a level here, a level here, a lower high, a lower low. Price then breaks above this lower high previously, creating a bit of a new high. It pulls back slightly before then shooting off. So I was looking at these candles and what was the velocity of the candle, and I essentially just waited for the trade to push in that direction with a bit of velocity. So I got in here and I had my stop loss because it was very, very tight. I had my stop loss around here. I got in here and I had my stop loss. I think it was around, say it was around there. And I had my take profit at 38.5. So around here. So it wasn't even that good of a trade. It was like a 2-to-1, which is still fine. Ideally, we want a 3-to-1. I was just very, very conservative. We can see, even looking now, I probably could have held onto the position because it looks like price is continuing in this manner where it's making higher highs and higher lows. Again, I just wasn't overly confident, so I did risk just a very, very small amount. And managed to capitalize on that one. If we want to run through NASDAQ, let's just have a quick look at NASDAQ. So we'll jump to the 4-hour time frame. Now, this was very interesting last night and probably would have played with a lot of people's heartstrings because it just moved around, with a lot of... not a lot of conviction. It was going up, it was going down. It didn't really know what it wanted to do. So I trade the London session. So I pretty much stayed out of this because the trades that were potentially the good setups did happen during the London session. The New York session, pardon me. So we can see here, right? Again, very similar to gold. We can see that there was a high in the market, there was a low, a lower high, a lower low. Again, guys, this is marked out on the 4-hour time frame. Price then made a lower low, and at this point in time, I drew my level of interest on the body candle, which was right here. We can see that at one point in time, price broke above this level again, so indicating that we could be bullish again, but we know that below this level, that price has the potential to be bearish because of this indication here. So you don't want to completely write off that sellers are no longer in control because price breaks this level. What you could do, and I believe that's actually what I did have on my chart at the time, 4-hour up, I knew that above this level, price had the potential to be bullish, and I know that price below this level, price had the potential to be bearish. But I was more favoring sellers, primarily because of the move that we had been having. So if you look at this, you can see that price is very much in a downtrend, and there's no real reference point for us to really think that price is going to go back up again. There's no indication that we can really draw from on this higher time frame. So if we zoom in, our focus was at the time, or when I was looking at it, was potentially to be bearish. Again, I wasn't looking at the charts at this time, but that was my thought process. And I'm just running through this trade for those that potentially did trade the New York session and how you could have potentially capitalized there. So scaling down to a 15-minute time frame, we've got our 4-hour level of interest already drawn on the chart. So we can see that this is the indication right here. So now moving on to the next day, price didn't break above this level here. We can see here that this was the 9:30 open, so this was the New York open. At this point in time, price did break below this level, so it's really important, guys, that you can take trades pre the session. But often if price has been moving in one direction for a long period of time pre-market, it's generally going to try and correct before then going back in its original direction. That's just a couple of things that I have learned along the way just by watching the nature of the markets. So we can see here at the 9:30, this was the 9:30 candle where the markets opened. We can see price came back above our level of interest. It didn't actually really, it slightly broke above this previous lower high here, but that I would consider that in my eyes an equal high. Price then came back below this level. Now, probably at this point, that's when I probably would have looked to take the entry. So if we did take the entry here, let's just put this on here. I would have then looked to take the trade from here. And I want to then look to factor in a good risk to reward. We know that the overall target would be these lows down here, which is there. So this one was just shy of a 3-to-1, which is perfectly fine. So let's just see how the rest of this plays out. You probably would have been a bit frightened here because you could see, well, price came back above this level, but we know full well that below this level, there's more strength in selling based on the 4-hour time frame. That's the importance of drawing your high level time frames, because you get more confidence in taking trades, especially when you're utilizing the ICC strategy or the concepts. So price broke below here, created an equal low here, slightly actually a bit more of a lower low. If you factor in the body candle, you can see that the body candle, it closed below this level here. Just zoom in a bit more. So it closed below here, came back up, didn't break this previous high, creating an equal high before then breaking back down again. So that worked out really well. So if anyone caught that trade, very well done. And that's all that's really transpired so far, guys. I implore you guys to definitely mark up your higher time frames, the 4-hour, the 1-hour time frame, whatever looks good. Then you can look to look for the ICC characteristics, jump back onto the 15-minute time frame once the correction phase is complete, and then you can look to take those entries, whether it's an uptrend or a downtrend, following that strategy in place. I'm going to leave it there, guys. Look, thank you so much for watching. I really do appreciate it. If you liked the video, please do give it a thumbs up. And if you want to see more content like this, please do hit the subscribe button. Thanks so much for your time, guys. Have a great night, and I'll see you in the next one.